It sounds like clickbait, but it's not. The Atlanta Federal Reserve has just announced a major economic contraction in the United States.
Atlanta data GDP now sees economy shrinking after Friday data. It seems almost unavoidable that we are headed for a deep recession.
The alarm bells have gone off, and the problem is not only the contraction, but the suddenness of it. The North American nation has been recording record figures throughout 2024. Inflation was falling unchecked. GDP grew by 2.8%. The stock market recorded absolute peaks. And suddenly, in just 2 months, everything has turned upside down. The problem is that this is no longer just a statistical issue. US investor confidence has plunged to the lowest levels in years, even below the COVID era or the start of the war in Ukraine. And yet, this is far from being the end of the story.
US consumer inflation increases at fastest pace in nearly 1.5 years in January.
As if the contraction were not enough, just 2 weeks ago we learned that inflation is picking up again. This is not good news, neither for the economy nor for the stock market, which, as you can see in this graph, after months of uninterrupted rises, has registered a fall from its all-time highs in the last 2 weeks. But do you want to know the worst? Well, in the face of all this, the Fed has just put the icing on the cake.
Federal Reserve pauses interest rate cuts first meeting without a cut since July.
Along with booming inflation, the Federal Reserve has stopped lowering interest rates. This is particularly worrisome for 2 reasons. If it is true that the US is approaching a recession, then high rates will jeopardize the stability of companies, making it more difficult for them to refinance and obtain credit to get out of trouble. But on the other hand, if inflation does not let up, the Fed will not be able to lower rates to boost the economy and stop the eventual recession. The dichotomy would be as follows: either more inflation or recession, either of which will not be good. And the big question is, why? Why now? What on earth is going on in the US that everything has turned around overnight? Well, many have it clear.
Economists are starting to worry about a serious Trump recession. Economist who predicted biggest crash of our lifetime warns Trump could be blamed for next US recession.
Let's see. If there's one thing that's plain to see, it's that this contraction coincides squarely with Donald Trump's arrival in the White House. Is this a coincidence? Well, it could be, but many analysts don't think so. They believe that, in the short time Trump has been in power, he's upset everything so much that the economy has begun to correct sharply. And here, culprits such as the tariff war, fiscal policy, falling consumer confidence, and even immigration policy are being blamed. But what's the truth in all this? Well, in this video, we're going to explain why the US economy is suddenly collapsing. We'll analyze Donald Trump's responsibility in this whole affair and find out everything that is to come. Let's get started. Let's start with the boldest question of all. Is Donald Trump to blame for the US recession? Well, the analysts who attribute the contraction to him do so for 3 reasons. So let's look at them one by one. In January, the freshly inaugurated Trump administration declared a national emergency and deported nearly 38,000 people. Beyond the controversy and eccentricity of the issue, some Trump opponents argued that the deportation policy could pose a serious economic problem for the US. And do you know what? They're probably right. Donald Trump is not only deporting criminals, as he claims, he's deporting every irregular immigrant who gets in his way. What's more, if he could deport the children of immigrants born in the US, he would do that too. The point is that many of the deportees are working people. Normal people with normal lives and normal jobs who are forced to leave the country because they don't have papers. When these people are deported, their jobs are left vacant, and therefore businesses lose workers. In many cases, these workers are difficult to replace because US citizens are often unwilling to fill the jobs of illegal immigrants, and businesses may have serious problems compensating for the lack of labor. That's why, if Trump carries out his plan to deport 2 million people who mostly contribute labor, the effects on the economy could be particularly harsh. Now, is this really a reason that explains the contraction? Well, although it may have had an impact, for the moment deportations are still far from their 2 million target, and it's certainly not a sufficient argument to cause a 1.5% drop in GDP. If anything, this could simply be fueling an even bigger fire.
I think we're already tipping into a recession this year. Deportations are going to make it happen quicker, sooner.
Knowing this, let's move to the second reason given by those who blame Trump for the recession. some analysts, the US economy is beginning to show signs of strain due to President Trump's abrupt moves to reduce federal spending. You know, Elon Musk's famous layoffs, which look like they're going to leave everyone on the streets. It's even got to the point to say that Trump is going to cut military spending in half. But in this case, I'm afraid I'm going to disprove this theory. On the one hand, although it's true that in the short term, a large cut in public spending could shrink an economy, the truth is that this does not appear to be the case in the US. Why? Well, because beyond the emails to civil servants, Elon Musk's cuts do not seem to go much further.
Doge says it's now saved $65 billion in federal funds, but that's still impossible to verify.
Elon Musk claims to have cut $65 billion from the budget. However, recent data reveals that approximately 40% of the cancelled contracts, or 794 contracts, will not produce any real savings, as the funds were already legally committed and, in many cases, have already been spent. For example, some cancelled contracts included research studies already conducted, training that is already completed, software purchased, and media subscriptions already paid for. What's more, cases have been identified where the value of cancelled contracts was overstated. For example, one contract was reported as being for $8 billion when it was actually for $8 million. In total, correcting for these factors, it's estimated that the actual Doge cuts wouldn't even reach $10 billion, which comes to less than 0.032% of US GDP. In other words, less than nothing. And that's without taking into account that many cuts are likely to be reversed to avoid shortages like the one we've seen with air traffic controllers.
Musk urges retired air traffic controllers to come back as he continues to slash federal workforce.
The thing is that the cuts don't yield much, and therefore, blaming Trump for the recession because of the cuts is simply absurd. Even so, the third argument against Trump we're going to look at may be much more revealing than the previous ones. If there's one criticism of Trump that is absolutely correct objectively, it's that his policies are chaotic. You just don't know which way the president might go. For better or worse, he's the leader of political uncertainty. And no, it's not because I say so. There are indexes that measure the fear of unexpected movements in the US government. And following the arrival of Donald Trump, the barometer has burst the needles. We're talking about the fact that in just 2 months, the US government has created a record amount of uncertainty, since records have been kept, even more than during the 2008 financial crisis. Fears of a break with Europe, a change in the political order, and a skyrocketing deficit are key here. But perhaps the most important of all is the fear of blockages in international trade, of tariff wars. We've said it many times before, Donald Trump's isolationist policy is not good for anyone, but much less for US citizens. Because yes, if Trump slaps tariffs on Europe, Europe will suffer, but it will be able to seek alliances elsewhere. However, the Republican president's plan does not seem to focus on specific targets or products. The idea borders on philosophical isolationism, in tariffing every country and product possible, even from major allies and neighbors such as Mexico and Canada. And the problem is no longer just that the tariffs are ultimately a tax that Americans themselves will pay, but that this policy could do a whole lot more harm to American industrial companies. And if you don't believe me, look at what the CEO of Ford Motor Company said recently.
Ford's CEO to warn lawmakers of devastating tariff impact. Levies would blow a hole in US auto industry.
This last statement was not just said by anyone, but by the CEO of the largest automaker in the United States. Tariffs are a suicidal policy. Companies that need foreign raw materials or machinery for their factories will have to pay much higher costs to produce their products. Think about steel tariffs. Automobiles are produced with steel. How much will the cost of companies like Ford increase? How many people will have to be laid off to compensate? But that's not the worst of it. At the same time, we have to think about legal certainty, and here the example of Mexico is a bizarre one. In his previous term, Donald Trump himself approved a new free trade agreement with Mexico. His objective? Standing up to China. Mexico presented itself as an alternative for US factories that no longer trusted the Chinese to manufacture their products. In this way, with Trump's support, thousands of US companies began to install parts of their production chain in Mexican states. So what's the problem? Well, a month ago, virtually overnight, the same Trump who invited all companies to invest in Mexico established a universal tariff of 25% on Mexican products without prior notice. investments. In this way, the president not only unilaterally broke a free trade agreement that he himself signed, but also left all the companies that invested in the country stuck in the starting blocks. My question is, what will the managers of all these companies think? What guarantees does Donald Trump give to the security of US investments? Well, apparently, very few. Uncertainty is one of the worst economic curses. If no one knows how much it will cost to import supplies from another country, if investing elsewhere will be safe in the long term, if international agreements will or will not be respected, the consequence is clear. Fear paralyzes investments, hiring, and the economy itself.
The upbeat mood seen among U.S. businesses at the start of the year has evaporated, replaced with a darkening picture of heightened uncertainty, stalling business activity, and rising prices.
Visualeconomik community. The problem of uncertainty is not only theoretical, its effects are already being felt. One of the most paradigmatic examples of this is that companies have been ramping up their imports. That is, since factories don't know how many tariffs are coming, or from which countries, or from what amounts, they're hoarding supplies like crazy while they can. This is something similar to when during the pandemic, everyone was buying a ton of toilet paper at the same time in case it ran out. And although it may seem like a joke, since imports subtract from GDP, this phenomenon alone explains between 0.1 and 0.2 percentage points of the contraction suffered by the economy. But this is not all. Political and tariff uncertainty has also spilled over into financial markets. The yield on the 10-year US Treasury bond has fallen below 4.3%, but it's the yield on the 3-month bond that has outperformed it. Historically, this has anticipated almost every US recession in recent decades. But what exactly does this mean? Because investors are uncertain. They prefer to shift their investments from the stock market to safer securities, such as fixed income. Also, citizens, possibly as a precautionary measure, are reducing their consumption. Specifically, spending in real terms has fallen by 0.5%. And all this could explain news stories like this.
Weekly jobless claims jumped to 242,000, more than expected in latest sign of economic softening.
Now, to attribute all these problems to Donald Trump alone would be a grave mistake.
Beyond Trump.
Although the Trumpian chaos and the tariff war are not helping at all, the truth is that the US economy has been showing weakness for some months now. Signs of end-of-cycle fatigue. End-of-cycle fatigue occurs when an economy that has been expanding for an extended period of time begins to show signs of exhaustion. After years of strong post-pandemic recovery and consumption fueled by fiscal stimulus, the economy is losing momentum. Businesses are cutting back on investment and hiring, while consumers are beginning to spend more cautiously due to persistent inflation and high interest rates. This is something that, for example, is very well reflected in the very low level of home buying. Americans are buying even less real estate than right after the bursting of the financial bubble, which is a clear sign of economic weakness. Likewise, investors such as Warren Buffett have long been diversifying their investment portfolios towards safer positions and stocks less dependent on the volatility of the US economy, precisely because they've already detected structural symptoms that aren't very encouraging. But having said that, what do you think will happen to the US economy? Do you think Trump is to blame? Or has he simply added fuel to a fire that was already there? You can leave me your answers in the comments. And as always, don't forget, here on Visualeconomik, we release new videos every week, so subscribe to this channel and hit the little bell so you don't miss any of our updates. If you like this video, give it a like, and I'll see you in the next one. All the best, see you next time.